run it. Ooh, I really feel it's my time, think it's my year.
Well, we made it to the final show of the year. Welcome to the morning show. This is Stock Market TV. Good morning, everyone. It's last day of the year. We're all in a good mood. The market is certainly helping that, right? We're all feeling good about our portfolios. We're feeling good about the holiday and the new year. So I guess the theme for the day is come for the charts and stay for JC's New Year's Eve wine recommendations. I don't know. Ian Cully, who has not been on the show for quite some time due to a variety of scheduling and holidays, he'll be on the show in a few minutes to talk about what's going on in his world. That's fixed income currencies and commodities. We'll talk some of that. It is Friday. We have a few crypto charts as well. So if you're watching on YouTube, hit that like button for me, please. And let's go.
Oh yeah. Last show of the year. Merry Christmas, Happy New Year, Happy Hanukkah, all these good things. How about that, Spencer? We made it. Strazza's still alive.
You know? Look at us, red, white, and blue, unplanned.
Look at that. I just need to say something. And I feel like some people know it. I thought I knew it, and I did not. And that is very simply, Arthur Avenue is so awesome. It is so awesome. It's so good. You know, I feel like, you know how like our Korean friends tell us, you know, when we ask them what the best Korean food is, they just say, just go to K-Town, walk down the street and go to the place with the shortest line and it's going to be awesome. Arthur Avenue is kind of like that. Like ideally you get into Dominic's, but you know, it's always so crazy packed, right? Everything there is so good. We went to San Gennaro. Oh my God, dude. This veal parm was ridiculous. Everything was just so good. The fresh mozzarella with prosciutto. We had cannoli donuts. Like what? Who's ever heard of such a thing? Cannoli donuts. And we had 2 bottles of Amarone della Valpolicella, and that is my New Year's wine recommendation for everybody. Amarone della Valpolicella. Comes from northern Italy. It's not cheap, but it's awesome.
I love this take. Arthur Avenue, also very charming this time of year with the lights.
It is unbelievable. You know, I've been there a million times. I lived in New York forever. You know, I've been up there, you know, Yankee game on Arthur Avenue, like just standard moves, done it before. Hadn't done it in a minute. Couldn't tell you the last time I did it, maybe 5-6 years. Probably since I moved to California. Man, it's so good. It's so good.
What did you eat? Did I miss it?
I had veal parm.
Good. Nice. Perfect.
Fantastic. Wow. So good. You know, nice and thin, bone still in. Oh, crushed it. Good for them.
Now that I'm hungry, let's talk about stocks. How was the game, though? How was the game?
It was great. I mean, listen, I didn't expect much. I figured I just wanted Miami to not totally embarrass themselves, and you know they accomplished that. You know they didn't have any players, so you know it was just cool to see Miami Hurricanes playing in Yankee Stadium. Like that's just cool,
right?
You know, especially with my dad and my cousin was in town, so it was cool. Family affair. Why don't you hit that bumper and go to that first chart because I think there's a lot in there. So you know, I'm not big on year-to-date returns. You know, I think it gets people overthink it. People overthink the implications. I think this year in particular, I think it makes sense to not overthink those year-to-date returns simply because we got massive sector rotation in the first week of the year. Massive sector rotation into mega caps, into technology and growth. So everything's going to be skewed. So just keep that in mind. Now, here we are, last trading day of the year. Let's overthink year-to-date returns now.
Let's do it. I love it.
No, I don't want to overthink it. It's just what it is, right? These are the returns for this year. You know, use this information how you may. A year ago, Strazza, I would have told you that these are the numbers that these assets will put up. What would you have said?
Fine.
The Bitcoin and the Ethereum, I think would have made perfect sense. Sentiment was down in the dumps.
I think that's the least surprising.
That's the least surprising. Agreed.
Yeah.
Sentiment was just atrocious. We were outlining it right here. Obviously, I think a 55 spot out of the Qs, as bullish as we may have been all year, that's aggressive to the upside, doubling the returns, more than doubling the returns of the S&P 500.
If you would have told me this would have been the return profile a year ago, the only problem I would have had with it is there's no way bonds are only up 3.7% then.
Yeah.
Right?
I mean, now let's remember they crashed and then bounced back. So it was the biggest bond market crash. Now, granted, it wasn't just this year.
It's almost like the year to date doesn't show the damage.
Yeah.
The stock market has been front running the bond market this whole cycle.
Yeah.
It continues to.
Underperformance out of gold and silver. Silver putting up a 0 for the year. Probably I would have taken the over on that.
It looks like these trash metals are failing again.
How about emerging markets ex China putting up almost a 20 spot this year? That's impressive.
That's EMXC, yeah.
Yep. EMXC outperforming EFA, which I would have said it would be surprising because remember the fourth quarter last year, developed markets dramatically outperformed EM.
Yeah.
So the fact that they kept up together, and EFA ended up underperforming for the year, I would argue that's probably a little bit surprising considering how strong they were in the fourth quarter last year. Granted, if you take this back to the beginning of the fourth quarter last year, the numbers are going to be different.
EMXC versus EM also very noticeable spread there.
China.
Yeah.
Yeah.
I know. I'm just saying it's a noticeable spread.
Here's take it back one more quarter. Let's take it back one more quarter. So this goes back to throw slide 3 up there, Spencer. So this goes back to the beginning of Q4 of last year. Look at that EMXC up almost 30%. So it's EMX China up 30%. EFA up 40 if you include the fourth quarter. That's a monster move. And then look at the Qs up 55 because they didn't do anything in the fourth quarter last year. So the year-to-date returns and the 5-quarter returns for the Qs are the same. And then look at silver, right? As opposed to a 0 spot for the year. If you take it back one more quarter, silver's up 26%. That's pretty impressive, outperforming gold. Emerging markets with China still up 20%. That's impressive. Bonds flat.
You can change any argument you have by just changing the time horizon, right?
Yeah, I mean, listen, I'm coming out of the gates talking about how we don't want to overthink year-to-date returns. Go back to the actual year-to-date, the one above. This is what happened this year. It is what it is. Make of it what you will. I think it's nice to kind of go back and reflect on sort of what happened, right?
JC, an exercise that I think we are almost making tradition of at this point. We do it every year. What is the biggest, most important thing that you learned in 2023?
I've thought about this and I answered the question already, and that is just how few people, and I guess I should have known, but I didn't, how few people understand that the quote is don't fight the tape, right? People, investors, I don't know where they heard it from, or what their problem is, but they think that the saying is don't fight the Fed. When that's not the saying at all. The Fed has nothing to do with it. It's don't fight the tape. That's the one that you want to focus on. And I always knew that, but obviously I was formally trained in this, and I guess a lot of people haven't. So I guess what I learned this year is how few people understand that what you're trying to do is to not fight the tape. So focused on not fighting the Fed. They don't even know what the Fed is doing, and they don't even know what they're not fighting.
Yeah.
You know what I mean? Like, so they're missing out on the whole thing because they're worried about the Fed and missing out on the task at hand, which is the tape. So what I learned this year is that fewer investors than I thought have learned that, which is a great arbitrage, right? Screw
Because
them.
the tape tells you all you need to know about the Fed.
If you're interested in
That's
knowing
it.
about,
Right.
you know,
If you want to read into it that way.
yeah, if you're interested in the Fed, I guess, you know, the market's always pricing it in. There's this thing called Fed Fund Futures, which tells you exactly what the Fed's going to do. So, you know,
You're right. You're right. For me, it was the intermarket. It's so good. You know, a few years back, I think, what was it, 2020? It was breadth. Don't ignore the breadth thrust. Then it was, you know, the past few years, it was really relative strength, I think stood out as the big lesson. This year, it's intermarket. And in both directions, right? Because the dollar, you've been the loudest about it, has been the best information we've had.
shout out Zloty. Shout out.
Throw up that chart, Fonz, that I just dropped in.
Throwing up the Zloty.
Interest rates have told us a lot about certain risk assets at certain times also this year. But then in the opposite, you know, on the other side of things, they work until they don't, right? They're great information at times, and then sometimes they kind of dislocate, right? Things like copper, gold, these regional banks.
Hold on, time out. Chart crime.
I know chart crime. No.
The S&P 500 is inverted here. There's no mention of this inversion whatsoever on the chart. Chart crime. Huh.
Well, the axis kind of says that.
Yeah,
right?
well, you know, a trained eye can identify the inversion of the chart.
If you look at the axis, you see it going down, you know, down lower to higher,
saying that
top down.
That mislabeling.
I just made it. I just
hardcore chart crime. I mean, that penalty box for that.
You can put it back up. We
Stick them
understand.
in the bathroom. Stick them in the bathroom.
The point remains. Look at how good it's been, right?
Yeah.
Best information. Don't ignore the dollar when the relationship is this good. You know, just pay close attention to it.
Yeah. You know, also, you know, speaking of intermarket, obviously the dollar has been a tremendous signal for us. Thank you for that negative correlation and being so precise, because man, it's been like a map. Like, you know, if you want to know where you're going, you know, Google it and go to Google Maps and it'll take you to where you want to go. That's been essentially the dollar this year, and prior years as well, for that matter. But also, you know, some traditional intermarket relationships that weren't that helpful. Copper gold, not really helpful. Regional banks, REITs ratios, not really helpful, right? So there were intermarket relationships that broke down over the last couple of years. Also, these bond market relationships have really changed. So when you talk about how great intermarket analysis has been this year, I think it's as a friendly reminder, these relationships change. They don't change often. Correlations don't last forever, but they sure as hell last a long time. But they do change, and it's important to be aware of that. And we have seen some of those changes, particularly interest rate sensitive relationships. No?
There will be new intermarket relationships that work in this environment that didn't work over the last 20, 30 years.
Yeah, the euro yen was trading tick for tick with the S&P 500 in 2008, for example. That changed, right?
They come and they go.
They come and they go. Some of them come and stay a long time, right? They usually do, I feel like. But yeah.
Shoy Lu in the chat here. Shout out to Copper Gold. Hasn't been good.
Yeah, it hasn't been what it's been in the past, right? Which was a great heads up as to what was taking place in the interest rate market. Like I said, it's really the interest rate bond stuff that's kind of shifted, and anything related to that has totally changed for sure. Let me just do a quick rundown. Dow futures this morning are flat. S&P futures flat. NASDAQ futures flat. Literally zeros across the board for the Dow.
Even Bitcoin, it's quiet.
All flat. Bond futures, 30-year bond futures down 50 bips. Gold down 40 bips. Silver down 2%. Copper down 70 bips. Crude oil down to 72. Up about 60 basis points today. And dollar up with the slightly with the euro and the yen slightly down. Volatility index inching higher with interest rates. And of course, in the old funny money, we've got Bitcoin up $300 up to close to 43,000. Ethereum up 1%, up towards getting close to 2,400. And the ETH BTC, big move yesterday, reversal, trying to stick it today. That ETH Bitcoin ratio really trying to turn the corner here. Listen, I want to thank everybody for all the support all year. We got big announcements coming now, the first of the year. Big announcements. So I just want to wish everybody happy.
Are you leaving us early again, JC?
I'm leaving early. I got some family obligations today, which but I want to swing by, say hello, everybody. Wish everybody a happy New Year. Amarone della Valpolicella. Trust me. If you listen to nothing else I ever say, drink Amarone. Amarone della Valpolicella. Northern Italy. It is fantastic. It's made out of Corvina. Use the pasito method. A little complicated. Love you guys.
All right, we appreciate it, JC. We'll talk to you again in the new year.
Adios.
All right.
Those futures being flat or unchanged, literally nobody is working today.
When I come in, so JC says Bitcoin up $300, but what I see is Bitcoin up 0.85%. If you're up less than 1%, might as well be zero. That is flat for Bitcoin. So, I come in, I see Bitcoin up less than 1%, ETH up less than 0.25%. I'm thinking, whew, snooze fest.
Yeah.
You want to know what my biggest takeaway for the year was? And I liked that year-to-date chart. My biggest takeaway in looking at that was that chart looks easy, right? But it didn't feel that easy in the moment. Especially when you consider that we spent about a third of the year, I'm just talking about the Qs, a third of the year just in a downtrend, right? Sideways to down. It certainly looks easy when you look at the year-to-date returns and say, oh, 55%, that must have been awesome the whole time. It wasn't awesome the whole time. It was awesome most of the time, but not the whole time. And certainly I am as guilty as anyone is in putting too much credence on any one day or any 1 week. And it's just a mental note to myself that when in doubt, zoom out. But the year-to-date returns and the day-to-day gyrations, they don't line up.
Yeah,
they don't line up. Right?
You're right, and that's always a good lesson. We were consistently bullish at All-Star Charts all year.
Yes.
I just want to say, so speak for yourself. No, I'm kidding. Shout out to the analyst team. Everybody, not just Sean and JC, but all the guys behind the scenes. Alfonso, who runs the show for us. Louis, who's coming on. Ian, who's coming on in a minute. Sam, awesome new intern. Grant, our stats guy. We have the best team in the world. So, we were talking about it the other day. It's been a good year. Now we got to do it again in 2024. But I just want to give everybody a shout out because I'm very proud of the team at All-Star Charts this year.
Definitely. Yeah. Couldn't agree more. You guys crushed it, and we have more good things planned for next year. Can I talk about what I think is a kind of cool stock market anniversary that is today?
Yeah, and first, don't listen to the newspapers either. Did you see this Wall Street Journal article?
No.
The blockbuster year for stocks that everybody got wrong. Not everybody got it wrong. There were plenty of people, of course, not the majority. They were in the minority, but there are plenty of people out here saying the right things this year. I don't know.
I didn't see that, but I get push notifications from the Journal, and I got one I think last week, and it said it was something like your 401k is up a lot. Don't let it go to your head. That's what it said.
That's a good one.
Something like that.
I support that one.
Anyway, I'm always on the lookout for anniversaries and historic moments and birthdays and whatever. And you know what today is? Today is the 34th anniversary of the all-time high in the Nikkei index. On this day, 1989,
Oh shit!
Japan's Nikkei made an all-time high The exact number, 38,915.87.
Dude. So that big year for Japan in 2024. 2024 is a big year for Japan. I think it's going to be a big year for a lot of stocks all around the world, a lot of global markets. But look at this chart, man. You got to throw a party. 30-year breakout.
I mean, pretty good decade for Japan, frankly, for just being truthful about it.
Good stuff. Oh, that's a fun one. Listen,
yeah,
this chart is one of those. Oh God, it gets thrown around so much when technicians are drinking beers. You might say something that's like, well, it might be Japan, right? This is like become like the example, like frozen in time of like just dead money or opportunity cost for an extended period of time. Because a lot of us like to say, oh, look, just zoom out on a chart of stocks. US stocks, sure, consistently marching higher. Not that way for everybody, right? Maybe this is a nice time to reflect and be grateful. Wow, we have access to United States capital markets because our charts, go flip through these global indexes. The charts with the US major averages tend to look a lot different than some other ones. You know, if you've been investing for the long term in Japan, my point is for 30 years, you're maybe just getting back in the green now. You could have been under.
Or you've been investing for 13 years and you're looking pretty damn good. It's all about timing.
It's an anchoring exercise, but
that's
the
it.
point remains.
That's it. Yep. Anyway, I thought that was fun.
You can't say that about U.S. stocks is my point. I thought that chart that Blake brought yesterday, I don't know if we still have it. Throw that thing up.
I think we do.
Throw that chart up.
Which one?
The one that shows the bar charts of if you held for X amount of years, what is the percentage likelihood that you're in the green? That you're in a gain position?
Yep.
It's a bar chart. Throw this thing up. This is such a good lesson, such a good reminder. This is so important. This is one I was saying for young people. This might be the one chart.
Where is it?
But at the same time, right, the other side of that coin is in the context of something like Japan, it's not like that. You know, if you've been investing in other indexes and not the S&P 500, this is an S&P 500 specific statistic here.
Right.
Where's the chart?
Yeah, he's got it. We got it right here. There we go.
So cool. So basically what it's saying is if you buy and just close your eyes and look back 15 years later, it's pretty much a 100% chance that you have positive returns. This is going back a century, right? We're not cherry picking here.
Although we are cherry picking.
It's all the data we have.
Right, but we're cherry picking the U.S.
Well, exactly. Do this with Japan. Yeah. Actually, can we do this with Japan? Fonz, do this with the Nikkei.
I don't know.
Grant will do it. It's not the same with international markets. So, I don't know. Something to think about.
Definitely. Food for thought.
Not everybody is this lucky. A lot of us, we get automatically invested in these stocks. Our 401k plans and different plans, right? Pensions. I don't know. Pretty cool. Is that not cool? Is that not? Feel lucky, grateful to be an American.
I take it for granted I don't ever. I rarely sit back and appreciate the fact that I just happen to live in. That I have access to this market. That I take it for granted. I will admit that. I shouldn't, but
not just access too. I could tell you we have. It's highly accessible to everyone. It's not like that everywhere else either. Right? Like I said, a lot of people are.
You learn that firsthand. That's right.
A lot of people are literally getting put in these stocks automatically. It's not like that in other places. So, sweet.
That's right.
What else we got?
Okay. We'll have Ian Cully come on in a couple minutes. Talk some FIC. What else? Let's see. Man, it is so quiet out there.
I want Ian
in terms of just like
Ian's going to come on. He's going to pump gold, and we're going to get that breakout. I mean, somebody's got to. If this doesn't go, Spencer, I don't know. What do we do with gold? How many gold bars? How many gold bars do you own?
I've been waiting now for how long? I don't know. How many months since we started the show, basically?
Man, I've been waiting my whole life, literally, my whole career.
No, I know, but specifically, recently, right? Obviously, and yeah, in my career too. Obviously, it goes without saying. My career is shorter than yours, so yeah, it goes without saying that. But specifically for this gold breakout, that I thought was going to happen in like January or February of this year, and then it did, and then it didn't. You want to do actually? Apparently, we have some crypto charts. You want to do crypto now, and then Ian?
When is Louis coming?
Louis is out today. Louis is off doing New Year's things.
Got it. He sent charts though.
But he sent charts because he's a mensch.
Okay, so I will do Louis' crypto segment. I know the people want it.
All right, let's do some crypto.
Boom.
What do we got here? Oh, the monthlies.
Let me get this deck up. Yeah, new monthlies this afternoon.
The point I was saying about Bitcoin being the least surprising part of that year-to-date chart is if you're not used to Bitcoin crashing 75% and then ripping 200% by now, then this asset is not for you because this is what it does. So
I think did I tell that I was talking to a client who asked about Solana, and we talked about it yesterday, right? Go back, look, April to July of 2021, it was down 50%. You're gonna have some nasty drawdowns, even in the uptrends, right? Even in the bull markets. And people can't take it. Just go look on Twitter the last 2 days. Solana's down like 20%. People are losing their minds, and that's good, really good. Sentiment's still very ripe, I think.
Look, total sense. There is a cost to risk, right? Risk is expensive. The more risk, there's a cost to risk and reward, right? The cost for reward is risk, right? The more reward, the more risk. That's just basic anything. That's gambling, that's investing, that's anything.
Tell them. Absolutely right.
That's what the cost is volatility. That's the cost you pay.
You can try to use different vehicles or investing strategies or trading strategies to limit your risk, but in crypto markets, I'm not going to lie, it's hard. You can put stop orders in if you want. Doesn't mean they're going to get filled anywhere near where you put them, depending on the exchange too. It's not like the stock market. It's really still the wild, wild west out here. I messed up an order the other day. I'm still learning on my crypto apps. All right, let's walk through these.
There's a reason I just do market for everything.
Yeah.
Too many times I was getting cute. I would get so cute with my orders, and then I would not get filled. And then what even is the point of this? So market all day.
All right, zoom into this next one of Bitcoin. Look, the reversal's in and confirmed for above 30. Next chart. Yeah. You see the bullish momentum regime, right? Confirming this new uptrend. I think for all intents and purposes, especially if you're entering anywhere around this level, and I don't think you need to use 46, right? You would want to zoom into that chart, draw out this little coil, right? We've been tight in a continuation pattern really for all of December or most of December. You could just buy the resolution of that, but then your target's got to be those old highs at this point, right? And not saying you need to get cute, but it very likely overshoots those old highs. Go back to the last chart. Why do I say this? Never really seen a bull market take place in Bitcoin that doesn't more than overshoot those old highs. Remember, I brought along those charts, Spencer, showing like the 1,000% gains after the bases break out, after the reversals are in.
Yeah.
In the assets, right? So they don't just go back to the old highs in new bull markets. But I would say that's first stop, right? If you're looking for trade in Bitcoin here, I still do like it, but I think these next two charts are important. Just go to the dual pane one. ETH and ETH. Yeah. I think ETH is giving you a better opportunity here. I also need an ETH absolute basis chart, which I don't see in here. So here's Ethereum relative to Bitcoin, the navy blue up top, and then Ethereum relative to Solana. We've been talking about what a dog Ethereum's been for like months now. It's been driving me crazy. Hasn't been moving. these other tokens are going 2-3x over the same time period. I'm not saying that the you're all of a sudden going to see some leadership from Ethereum here. These lines need to stop falling before they can start rising, for sure. But this is a very logical place to see some sort of reversal in these relative trends, or at least a bottom, right? So that means no more underperformance, at least. And then when you flip to the absolute trend of Ethereum, which I hope we have, let me get it real quick. We have this beautiful base breakout that literally just completed, and then a nice high and tight coil right at the base breakout level. Let me grab it quick.
Do we have the Bitcoin still on? I have an idea of what it looks like, but I don't think we do. Never.
Yeah, we can get you that.
Yeah, I mean, I can get it myself. I just didn't know if we had it here.
Would you be buying Ethereum at this level?
Would I be buying Ethereum? Well, like it's a logical level. You got pretty clear resistance, right? It's pretty clear as day. I've certainly bought things I've bought other things at levels like this before, right? Where you buy it almost anticipating the breakout. Of course, it hasn't happened yet. So
here it is. Here's the
I mean,
chart.
you certainly could. I'm not really sure where your out would be. That's the issue.
I think you're in either on weakness back to the base breakout level, called like 2130, or even as low as those summer highs from last year, so like 2040. And dude, your out is, how many times do we have to talk about this? Your out is back at those old highs.
Yeah, your out is frankly is here, kind of. But like I said, I've certainly bought things in the past at places like this, anticipating the breakout, and usually that does not work out. But breakouts happen.
Your target is back at the old highs, so you're looking at a double here, right? Back to almost 5,000. Listen, that's great. This is one of the big boys too. Think of this like as a crypto investor, you're buying Microsoft.
Not the worst analogy.
Yeah, it's lower volatility, also lower beta. Like Spencer just taught everybody, risk reward. This one's a lower risk, lower reward than something like Matic, or let's show some of these altcoins now that we've been.
I suppose, but if you're looking for low beta in crypto, I don't know if you're fishing in the right pond. But yeah,
I feel more comfortable holding like these like legacy positions, which just is a fancy way of saying like a long-term investment in Ethereum and Bitcoin, far more than I would in some of these altcoins. Like I've owned Bitcoin through cycles, right?
Yeah, me too.
I think you could do that with Ethereum too.
I've done it.
I don't know. Well, I don't know if you want to do that with the Matic, right, or the Dogecoin. I don't know. We'll see. Throw up the Matic. Speaking of the Matic, these are two from Louis.
What's the market cap on this?
I've been sharing which ones I'm buying each day. I'm gonna probably keep doing that on Twitter. I bought some of the Cardano earlier this week. I bought some Algo. I got woke up with a price alert on the Algo in the middle of the night. You believe this? I've been up since like 5 o'clock in the morning. My Algo
$10 billion.
Forgot to snooze my phone.
$10 billion in Polygon.
Yeah, listen, this one was really resilient and had a far less severe drawdown than its peers. So it's kind of been on our radar for years now. You could see it just from the left-hand side of the chart. Some of these other cryptos got blasted like 95%. And then it tried to make a run higher last year into early this year, right? And I think it's getting going again here. 125, I think, is confirmation. You could buy this, I think it's like a multi-month coil. If you were to zoom in on this chart, you could see where that little gray rectangle is drawn. You could buy that breakout, and we're pretty much getting it right now. One is a pretty clean level. Throw up Binance, which I really don't love. Louis likes this one. You have a range in this, but speaking of lower volatility, Binance is one of the lowest volatility coins, believe it or not. Again, same as Matic, far less severe drawdown, which you wouldn't think.
I have no understanding of this and why it's not a zero, frankly.
I saw headlines this morning. Was I dreaming about Do Kwon?
Were you dreaming?
No, I think he got in trouble or something.
No, He's been in trouble. What do you mean?
Yeah, like worse trouble.
Let's see. Judge sides
Oh
with the
no,
SEC.
the judge ruled that they were securities.
Okay.
I think.
Hasn't he been like on the run this whole time?
I think they got him.
Oh, okay. Anyway,
He's only 32 years old.
oh, gosh, he's my age. He's a little younger, but still.
All right, I want to talk about gold. Why don't we get Ian on here?
Ian, let's do it. Good
morning.
How we doing?
All right, how you doing today?
Long time no see on the show. We had some holidays, you had some vacation, and due to a variety of circumstances, it's been a few weeks. So welcome back.
Thank you. Good to be here on the last trading day of the year.
Well, for stocks, there is never an end to the crypto.
Nah, that's right.
That's right.
Speaking of crypto, I like AVAX. I think you guys are always talking about Solana.
Hell yeah.
I like AVAX. It's a great looking chart. It looks a lot like Solana. But maybe I'm just talking my book here, Spencer.
It's okay. Whose other book would you talk, if not your own?
Exactly.
Certainly not mine. All right, Ian. Strazza wants to talk about gold, apparently. So give us some. What's the deal here, man?
I wouldn't hold your breath waiting for that gold breakout.
Yeah, you'd be dead.
Yeah, I don't think we're gonna get it this month or next month, I should say. We're not in January yet. Yeah, I don't think we're gonna get it next month.
And when?
Then when? Later 2024. I don't think it's gonna happen. Again, in the reasoning, I think we get a bounce in the dollar here. The dollars, run to that 101 level, and then if you look at individual pairs, a lot of these other major currencies are reaching logical levels of resistance against the dollar. So I see a dollar bounce. I
agree.
And if we see that dollar bounce, the dollar's been highly correlated not only with stocks, but it's also been highly correlated with crude oil. So if the dollar starts to bounce, I think that positive relationship remains intact, and we see a little bit of a bid in energy.
This dollar chart is starting to look like the Russell 2000 last year.
Yeah,
this year.
But what's great is amazing year, amazing 2023 for stocks, right? And look at the dollar.
Are you saying it didn't go down that much yet? It hasn't even resolved this range to the downside yet?
Yeah, stocks didn't need the dollar to really make a directional move. Sideways chop was all they really needed, and I think it's the same for rates, right?
Great point.
Yeah.
I was doing one of the calls earlier this week. Do we have that long-term chart of the dollar showing the 103 zone? Mm-hmm. I was literally saying, I was like, 103 is your line, right? Below there, everything's great. And imagine a world where Dixie heads back to the lower bounds of this range. We're talking about dollars in the 80s.
Yeah.
What are stocks doing then? To your point, 55% in the NASDAQ with a sideways dollar.
Yeah.
What if this heads back to the bottom of this range?
Yeah.
Isn't that the way we should be thinking?
Absolutely. And just not just the NASDAQ, not just the S&P 500, but global equities. Right, the ACWI, international stocks, just risk assets in general, AVAX, Solana, Bitcoin.
Listen, I'm with you on the AVAX. It's one of the best ones. Yeah, it's one of the. It is top 3 leaders, maybe top 5.
Yeah.
Include some smaller guys. So, Ian, talk to me about these death crosses.
Well, every time we get a death cross, I won't say every time we get a death cross, but usually after a death cross, stocks tend to do really well.
Spencer, can we have a we're doing sound effects now, Ian. So we've been brainstorming. We need a sound effect that's like death cross.
Death cross. I like
Right? Like old like
I
Mortal
can
Kombat.
I can just record myself. I have some
great.
effects.
That'd
Okay.
be great.
All right. We got it.
I don't pay attention to death crosses or golden crosses or any of that jazz. But this is really interesting. Grant ran these numbers, put this table together, and here you go. Stocks do well after we get a death cross. And it looks like we're about to get another death cross here. So we'll
So this is just explain it. Real high level. What the hell are we talking
We're looking at the S&P 500 returns over a number of time frames, near term, like 5 days, 10 days, 21 days, and then 1 year, 252 days on the far end of the chart here. So
when what happens? We're showing S&P 500 returns when the 50-day moving average in Dixie crosses below the 200.
Yeah, absolutely.
Right, so
a lot of traders and analysts look to that signal, which we call a death cross, as a clear indication of an impending downtrend.
And Dan's right. We need add laser sounds to that.
I like it, Dan.
So basically, weak dollar or a death cross could tell you that a new downtrend is underway, right? A downtrending dollar, green on the screen for stocks. And what Ian is saying is this really is a new downtrend, really just getting started. We came off, big time in September of last year. There was some significant downside coming into Q1 of this year. And then again, I love this point, just sideways all year, kind of consolidating after peaking. So I think, an eventual range resolution to the downside, that could be the golden ticket for stocks this year.
Yeah.
And I think you're also saying it could take a little while. Be patient.
Yes, it could take a little while. And when we get that downside, if and when we get that downside resolution in the dollar index here, that's when I think we'll get a decisive breakout in gold.
So for right now, we're looking at stocks and other risk assets, and we're saying, wow, Spencer loves to be like, they're so extended, I can't buy them, right? And then at the same time, you look at the dollar, right, which has been that intermarket catalyst at its range lows, a very logical level of support. It's acted as support several times just over the past year or two, 1 year. Dollar bounce, stocks correct. Doesn't that make sense?
Absolutely. And I think
Is it too easy and obvious?
I'm sorry.
Is it too easy and obvious that it would happen that way?
Yeah, but everyone's been reaching for those beat down areas, those tech names that haven't quite caught up yet to the Magnificent Seven, the neos of the market. I think we get a rotation out of those areas and back into energy. And energy just really still, Warren Buffett likes it, but I don't think you're the vast majority of traders out there have really turned on and started picking up energy names. So I think it'd be interesting.
How about the rest of the commodities market?
Well, I was looking back at the 7 charts that I wanted to keep a close eye on. My favorite charts going into 2023. Number 1 was sugar.
Here we go again.
Sugar, hit our initial and our secondary target, topped just above that 26 level, and has rolled over since. Great trade.
That was a sweet trade, bro.
It was sweet.
No.
Yeah, it was kind of late. Yeah, it was late to the game, Spencer. But what was interesting is a lot of the other charts that I shared early 2023, precious metals and grains. So I think this is a year where we're gonna, finally get that upside resolution in gold. Silver's gonna break back above 26 and start ripping towards 35, and we're gonna see some base breakouts in the grains, like wheat. I really like the look of wheat right now, carving out a double bottom.
Do we have these charts?
Yeah, wheat's in the Slack here.
Throw them up.
Yeah.
I'm so used to talking about
Well,
wheat on
actually,
this show,
Adam
and now
and
we're talking
Eve
about wheat.
double bottom.
Adam and Eve. Wow.
So it was forming a potential bullish flag here over that $6 level. I think it'd be long above.
Wait, I don't understand that reference.
I really
Like,
like
why-
how Ian marks up his RSIs. Just want to say, shout out Ian. I like the way you visualize that,
Yeah.
right? In your own head, you're paying much less attention to any divergences and much more to the regime. Is that true? Because that's what I see when I see it marked up this way.
Yeah, I just want to know or have a good idea of who's in control of the market, or the buyers or the sellers. And momentum gives us that information. So yeah, here we have a reversal, a bearish to bullish reversal in momentum. We see it time and time again. That tends to lead a bearish to bullish reversal in price. So to see this second bottom here of this potential double bottom start to catch higher, forming a near-term bullish pattern, I like it. I like Chicago.
Wait, I have a stupid question. Ian, why does it say Adam and Eve?
Oh, that's just a classic designation for a double bottom marking.
Just describe it. It's a V followed by a rounded.
By a rounded, yeah, exactly. And you see the same thing in tops. Like the dollar yen is actually forming a very similar pattern, but it's a topping formation.
Yeah, you see this on individual stock charts a lot too. Yeah. That spike low, that exhaustive low is the Adam.
Yeah.
And then you get a prolonged accumulation pattern playing out.
Exactly.
Okay, so grains, it's the Chicago wheat, not the Kansas City
not
wheat.
The Kansas
right?
City wheat. I like this chart better. We'll see as things develop here heading into the spring. But I'm sure there's going to be plays in all three contracts: Kansas City, Chicago, and the Minneapolis spring wheat as well.
Okay. What else?
Metals. I think watching for copper to get back above $4. I think that'll be just a huge development, whether you trade in copper or not, just for global risk assets. And gold and silver. Platinum's carving out a bottom. Palladium is digging in here. I love this chart you shared the other day, and it's spot on. We need to see these charts start to resolve their ranges if to confirm a breakout in gold.
But how about the industrial metals? Do we already what are the trends like there? Because I like the stocks. But what's going on with these with the underlying commodities?
Yeah, steel starting to turn the corner. No breakouts necessarily, but we are starting to see higher highs and higher lows, which is constructive.
Okay.
Copper again's looking good. It's just below that $4 level. We're starting to see a rotation, out of energy. We've seen a rotation out of energy and into base and industrial metals. However, that's reaching that relationship is actually reaching a logical level of support. So it's just another reason to see a near term kind of swing back into the energy's court here in January and in the first quarter of next year.
What's going on with aluminum? Because these stocks are really starting to work too.
That's a good question. I don't know. I don't know the fundamental story with aluminum. I know a lot of aluminum is produced in Russia.
Yeah.
I know it doesn't store well. It takes on moisture easily, so you can't really store it for long periods of time.
How about the trend?
What's that?
How about the trend?
I don't actually, dive in and trade any of these, base metals besides copper.
Aluminum's a wild one.
It's a wild one, and they're large contracts. The ones that are trade out of London.
Lumber.
Yeah, I haven't actually paid too much attention to lumber since that contract changed.
I feel like we never talk about it anymore.
Yeah, I mean,
'Cause it's
getting
lumber,
a
right?
decent lumber chart has been difficult.
Yeah, seriously.
Yeah,
I'm
so
noticing that right now.
Yeah,
Wow. Okay.
yeah. So the whole lumber gold ratio has been difficult to.
All right. One more for you. Is it going to be precious metals or base metals in 24? What is the current evidence suggesting? I know neither are perfect.
Yeah, I mean, I think precious metals are really going to take off.
Okay. Then once they get that breakout, they go, and they're the leader.
Right, but if they're going to move together. I don't think it's one or the other. I think if gold's going, the copper's likely going too.
Yeah.
Well, Ian, I hope 2024 is the year in which you get what you've been talking about happening for this year. So,
You're talking about a
feels like
breakout
we're on
in
the
gold?
cusp. It feels like we're on the cusp of a lot of things.
Yeah.
2024 is your year, baby. All right.
I mean, 2023 was a great year. I didn't even sleep last night. I couldn't fall asleep. I was up all night. I just came right into the office around 4:00 in the morning. I don't want to let go of 2023.
It's been good.
Okay. It's been such a good year,
A good one. 2023, good times.
Yeah.
Ian, you want to hang out with us? I mean, we're not going to go until 10 o'clock today.
Yeah.
JC dipped, so we'll probably dip early as well.
Yeah.
It's
so quiet. It's quiet here in this office. There's usually people coming through the door. It's constantly beeping. It's been quiet all week.
It's so quiet. I just asked a question in the chat. Will the S&P make a new all-time high by the end of the day? It's like 10 points away or something like that. So I know one day polls are silly, but I think it's fun.
So, you know what would be more fun though if it made a new all-time high on what was it when it
on Tuesday? On Tuesday, yeah,
January 3rd or whatever. That's when.
Tuesday is the 1 year anniversary. Or actually, no, it might be Wednesday. I think it's Wednesday. I think it's the 3rd.
It's a 2-year anniversary.
That's what I meant. Yeah.
It looks.
Dan says we need more polls. Okay.
I just dropped a chart in the chat. XME relative to our equal weight base metals index. So this is kind of what you're speaking to, Steve, is that these stocks are doing really, really well compared to their underlying metals. What's that?
The metals and mining stocks.
XME relative to our equal weight index.
XME's been ripping.
Mm-hmm.
I got me some Freeport calls.
What about SCCO? What about Southern Copper? It's looking good too.
I know, I'm not long. Looks great. I'm in Steel Dynamics and it's been a dog. Let's see. All right. Let's that's enough commodities for me.
Yeah. Speaking of commodities, though, one last thing. Ian, we got an email yesterday about our What the Fix show with Ian. We're still doing it, although we're not doing it live. Now we record it. We're going to be recording again today. The most recent video will be uploaded. It's set to go live after this show is over, so it'll get posted to YouTube right after this is done, and then we're going to record again today, and then we'll upload. I would hope by end of day today we upload today's episode. So still doing What the Fic, a little bit shorter, different format, but we know that people can't get enough of commodities and currencies and bonds for that matter. So still doing the show.
We'll talk about the dollar today.
Yeah, I was gonna say I forgot what we said we would talk about. The dollar? I don't even remember.
Yeah, we'll talk about the dollar.
Oh yeah. That's right. Okay, I got it now.
Ian, did you hear my lesson of 2023?
No, what was the lesson?
The intermarket. Just can't ignore it. It's so good.
No.
The intermarket information that we got this year. Amazing.
Can't. Yeah.
It was nice to take a step back and review the year, right?
Yeah.
And pretty simple. like to go back and think of, why were we positioned this way? Why were we thinking this? A lot of it just kept going back to the intermarket and mainly the dollar.
Yeah, I feel like the intermarket, the larger overarching intermarket themes really started to click this year. I remember struggling in 2022 and even late 2021. Because a lot of those relationships just decoupled and they broke down. Or like, I remember, wondering whether or not I was missing something or if they just weren't working at the time. And it was nice to see. Definitely the dollar and stocks and bonds.
Yeah,
that positive correlation remain intact over what almost 2 years now.
Think of the way that we came into the year, right? It was very top of mind, the dollar and stock relationship, right? Because last September we had that blow off top, right? Everybody's writing magazine covers about U.S. dollar strength. Muscle man George Washington, everybody remembers that.
Yeah,
right? Dollar came crashing down, and stocks, not growth stocks, but stocks and international equities had an epic rally in Q4 of last year, starting in the second week of October, right? The Dow ripped, Germany, developed Europe, great Q4 on the heels of that, big dollar weakness. And then that was kind of like present in our minds coming into the year, that relationship, and just really kind of continued to play out. And then I think you could say the same thing this year, but even more so than the dollar coming off in October, it was interest rates. Interest rates came off in a big way. And over the past few months now, interest rate sensitive stocks have been huge leaders. Right? So now it's the bond market now kind of talking to us. So I wonder if now moving into next year, are we paying more attention to bond? JC's so sick of this question, so I'll just kick it over to you since he's not. What is more important, right? Interest rates or the dollar or risk assets, mainly stocks?
Or I'll add a third option. The Federal Reserve.
Yes, there you go. The Federal Reserve. Thank you, Spencer. The dollar rates have been so tightly correlated ever since the Fed started to hike. So it's tough to say. I think it depends on what stocks we're talking about. I think your broader market is the dollar.
Yeah.
If you're talking about certain pro-cyclical areas,
totally,
it's rates. What's interesting, so what did we see after Q4 2022? We saw that rotation into tech, right? And tech had the best 6 months,
right?
Or the Qs had their best 6 months, best first half, not best 6 months in its history. So it'll be interesting to see what do you think that rotation? What do you think? Where do you think money is going to flow in the stock market during Q1 and Q2 of 2024?
What do I think?
Yeah.
Further down the risk spectrum. So not every growth stock is going up right now. There are still plenty of pandemic darlings that are in the gutter.
More and more of them are starting to work. We have seen a massive expansion in breadth in the growth and tech area. Just look at ARK since October.
So small caps.
Like if you are bullish, one of these speculative growth names, like Spencer's talking about some pandemic darlings. If you're bullish and it's not completing a base by now or looking like it's completing a base, it's probably not one that you want.
Good luck.
Probably not one that you want. Is that fair?
Yeah.
Because most of them are pretty much gone at this point. The leaders have gone. The leaders, even within these weaker areas that have played catch up now over the past few months, are going.
Yeah.
If you're sitting there looking at one that's still rangy, I don't know.
Forget about
That's true. If you zoom in enough, there was two in my head that I was thinking of when I said that. But if you zoom in enough, they have all been going up.
Okay. Who is the man or woman of the year for markets? Play a game.
Man or woman of the
Who's the man or woman of the year?
Who won this year?
Who
Could be anything. I'll go while you guys think.
Yeah.
I've got one. Who do you got?
Jerome Powell.
Oh, that was my answer.
Yeah.
It's hard to argue anybody but him, frankly.
All everybody does is talk shit about this guy.
The landing was so soft. We don't even know if we even had it. That's how soft it was.
Yeah, I don't know if we've had it yet.
Dude,
The fact that we can't even agree on whether we had it.
Yeah,
we're here.
yeah,
now.
it's okay. Fair one.
Listen, he didn't just guide us through and navigate pretty perfectly when you look back a pandemic. Sure, we got helicopter money that helped. But pandemic, right? Like we've never seen in modern day. The wars, right? And all the market volatility. There was a banking crisis. That was the Fed too. The Fed saved the banks, told everybody your money's safe. There were bank runs on the West Coast. That was the
Was
Fed.
there a banking crisis?
That was the Fed who stepped in and saved that.
There was
Not in a lot.
There was a community banking crisis. Right. Sure. Yes.
Rates rising at the fastest pace since the 1980s.
Yeah.
Inflation like we haven't seen in most of our careers. Right. Yeah. Winning. Checks all those boxes. I mean, give this man a pat on the back. Stop giving him such a hard time. Good Lord.
Yeah.
Some good names in the chat. Brian Armstrong. If we're making a list, of the top 5, he's probably on there.
Sailor. I like Sailor.
Sure.
Tom Lee and Stock Market Bulls. got real popular again this year.
General Bulls. That's true.
Bitcoin maxis. Who had a bad year? Let's be nice though.
Who had a bad year? Any of the people involved in Silicon Valley Bank, Signature Bank,
guys.
The what guys?
This is problems. Private equity space, venture space.
Okay. Yeah. There's been a number of SPAC bankruptcies. A lot of these SPACs are just going. They're shitting the bed left and right.
Hold on. We totally missed one, guys. Jensen Huang. Jensen Huang.
Jensen Huang is certainly top 3. Hey, I saw my first ever commercial for AMD last night. I never in my life seen a commercial for it was for the Ryzen. I never seen a commercial before.
They should just show a picture of their stock chart.
They should.
It was a particularly rough year for Elon Musk, I think.
Yeah.
He's definitely again, if we're making a list of like winners and losers of the year, he's definitely a loser of the year. He was a winner last year for sure. Yeah. Loser this year.
He's volatile.
Yeah, he is. He's high beta.
He's high beta. Oh god. He's fun though. And then 2024 will be just batshit crazy. The election year.
Oh yeah.
That'll be fun to do this next year. Okay, what was the trade of the year? It was the best investment on the books in 2023. I don't care if it's your best, the market, what?
Cocoa had a heck of a run.
Ian's like sugar.
Cocoa, live cattle. Yeah, there's some great commodity trades out there, and I think it'll be really interesting this year to see if we do get these a bull run in some of the grains. Because if we do, I mean, for me, that's just more information supporting a commodity super cycle, right? If gold finally breaks out, if copper's finally starts to trend above $4, and hey, maybe the cycle's actually here to stay for a bit, and higher for longer. For rates. Yeah, we'll see.
I'll call out too, and then Spencer, I want to hear from you. All my crypto folks know it. That was show those year-to-date returns. Bitcoin and Ethereum. This was really the trade. If you got in on time, Bitcoin, or better yet, any of these crypto stocks like Coinbase, or eventually the miners. Miners had a really nice summer, then a rough couple months, and then a really nice end to the year, right? you were in any of these trades, you had a huge year. Those are the best trades on the books, in my opinion. And then for most people, right, and managers, the biggest trade on the book, the only trade, was the AI mega cap tech trade, right? For institutions and money managers. If you weren't in that, you didn't win this year, right? And I think it's also for the people who understood when this AI hype hit in Q1, the people who understood that means the same stocks keep working, these same mega cap tech stocks keep winning. This AI theme, the people who understood that early on and knew it, they were in this trade all year.
Yeah.
We were all over it.
Yeah, that's a good point.
Another name for the list of losers of the year. Anybody still involved in Bed Bath & Beyond during and after the bankruptcy? Just, I don't know what to say. My
Best
trade
and
of the
worst
year is
take.
what?
Best and worst take of 2023.
Yeah, my best trade.
No, the best and worst take.
My best. Well, if you flash back to October of last year, the sentiment on tech was so unbelievably bad, right? That it's almost hard to remember how bad it was. But Facebook set the record, I think, twice for biggest market cap drop in a day. And the if you go down the Magnificent Seven, maybe with the exception of no, actually every single one of the seven, maybe not Apple, but the 6 of the 7 at least, you could see every day the negative theses just coming out. Oh, Nvidia, it was all crypto, and now the crypto bubble is gone, and now there's no more miners, and no one needs Nvidia chips. Oh, Facebook is doing the metaverse. What a gigantic waste of time that's going to be. Netflix, well, they're not Mag 7, but they were FANG. Netflix, the streaming bubble is over. Microsoft and Google and Amazon, the cloud growth is slowing down. Like all these things, they were out there, and yet it's almost like, who cares? So it's hard to argue for anything other than tech being the trade of the year. I'll go more broad than AI and just say the Qs, because I mean, damn, it was really, really hard to buy the Qs last year. It was you got smoked. And the metaverse is still a question, but you can't argue with the stock. So it's hard. I just what a fantastic, not unbelievable, but just amazing turnaround in the span of 12 months. Worst year ever for the 60-40 portfolio. And then you get the best 6 months for the stock market ever. Best first 6 months of the year. The Qs, I mean, come on. For all the people saying that this was the end of that secular bull run in tech, they're wrong.
You know who else?
So
on this topic, another group of people that were big winners this year is just passive investors.
Yeah,
it's very difficult to beat the benchmarks, right? It's very difficult to beat the indexes. In a tape where the Magnificent Seven is performing the way that they are, that's always going to be the case.
I mean, if the average return is 50+% on the Qs, then I'll take it.
I mean,
I'll trade the averages.
Imagine being a growth stock or a growth fund manager, and that's your benchmark. I'd be pissed.
Yeah,
very, very, very tough to beat.
I think 2024 though, and this is just a breath thing, right? They call it a stock pickers market. I think 2024 will be a much more conducive environment for active managers to be successful and to outperform the benchmarks. I expect to hear a lot about the performance from active managers this upcoming year. We really should. Right?
Yep.
I think what?
I'm trying to remember what other big events there were this year. Oh no, Bob Iger came back. I don't know if that was a big event. I don't know. Tough trade of the year is anybody trying to time the U.S. housing market. Is my answer for
that. Was going to be mine. That was going to be my bad take. 100%.
Oh, really?
Bad takes all year about real estate and housing. Really bad.
I mean,
spooky headlines.
you get
We for a couple weeks we were covering the headlines of all the crazy real estate articles. When I was in Japan, there was, I think it was Bloomberg. I was in a Bloomberg office. There was like this big, like spooky, dark cover of a storm over like a bunch of houses and talking about like death of housing all year with this crap. And look at the housing market, strong as hell. I think.
Yeah, and also like even just recently, like what did rates declined or more mortgage demand declined for like 2 or 3 weeks in a row, and then right back up again. Right? It's like it can't, you can't stop it. So it can't be tamed. If you're a buyer, get out of here.
Yeah.
I
It's so
don't
hard
know.
to time the housing market, and that's the thing when it comes to buying a house. You buy a house because you need to,
Yep.
right?
Housing is consumption.
Yeah.
It is a form of consumption. It is not a. I mean, it is an investment for some people. It's a forced investment, but it should not be. You shouldn't buy a house because your top reason is you want to invest. The top reason is you need a roof over your head.
Yep.
Yeah. Really, really, really tough to make sense of that market right now. So maybe my other good trade of the year was the home builders because of that. I don't know. I haven't looked at the home. That was home builders doing. Yeah.
All right. What's your favorite trade for 2024 that people want a stock pick?
One stock? That's really hard. It's hard because I don't want to. I want to find something that we haven't mentioned yet. We've mentioned a lot of things.
Okay.
I think it's going to be a gold miner or a silver miner. It's going to be some junky miner that's going to absolutely rip next year.
Spoken like a true gold bug.
I'm just saying.
Yeah, I like that. I like that. Give me something with juice, Spencer. Don't tell me it's going to be Johnson & Johnson.
Speaking of Johnson & Johnson, what we haven't mentioned yet is weight loss drugs. Come on, trade of the year. No. Oh man.
Speaking of
trade
Johnson
of the year. No.
I thought you really had something.
I do love that J&J.
No, I'm trying to find something that's not super cliched.
You want us to come back to you, buddy?
Fuck it. You know what?
Disney.
I'm gonna hate myself. I'm gonna hate myself. I'll go China. Screw it.
Okay.
All right. I like
Screw
that.
it. I hate myself for saying it.
No.
Good for you. All right.
K-Web.
Like
K-Web for 2024.
All right. Listen, I really like that theme. I'm going to double down on it. I was going to say C Limited. Southeast Asia. The Amazon of Southeast Asia. Online retail. It's coming off the lows. I think you eventually get a base there. I'm looking for international stocks to play some big catch up, maybe even lead this year. This one's growth. It checks the growth boxes, right? It checks the interest rate sensitivity box. Okay, it's an ARKY stock. Big catch up to play here. It's in a good group too. Look at all these other online retailers. So,
India is a better take from Elliot in the chat. Actually, I might want to revise my take.
If China bottoms and starts working, it'll outperform India. There's more juice there.
Certainly more juice, but also more, also less safety. So, yeah. Okay. Cool. You guys want to wrap up? I think we're good here. I think we have, it's the last day of the year. Not much going on. Very quiet out there. I want to give a shout out to Nomura. They just couldn't wait. They had to get their lift downgrade out today. So
what did they do?
So that's the one thing that I saw this morning.
They downgraded.
Nomura just downgrading the lift. Yeah.
Oh. Sweet.
And then LegalZoom getting a price target upgrade, price target raise from someone else. I forget whom. That was it. Really quiet out there as we've been saying all morning. 15 minutes into the open, and S&Ps are basically flat. NASDAQ is basically flat. Russell's down a little. It's all everything is flat. It's
Don't
bad.
listen. Good day. Go fishing.
Yeah.
Go for a hike. No, seriously.
Yeah.
Don't pay
Oh,
attention.
great day to go for a hike.
The last 4 days. Look at the volume as you flip through your stocks. Just notice how the volume. Like I was looking through. I have a nice list on Koifin. Relative volume. So it just tells you what is today's volume relative to the average.
Mhm.
300-400 stocks in the S&P 500 were like below half of their average volume yesterday. Nobody's trading these things. So don't overthink any of this. Spencer likes to overthink the daily price action. Definitely don't do it this week.
I definitely do. Oh, I want to revise my take again. My trade of 2024 is us, Stock Market TV.
Yeah.
That's my trade of the year.
Yeah.
Okay.
I'm very bullish. I'm very bullish.
Super bullish. All right. Well, so like I said, Ian and I are going to record a What the Fic in a couple hours. We'll get that posted later on today. If you tune into the channel in a few minutes, you'll see the most recent episode go live. We're going to premiere it around 10:05 Eastern time. And that's video of the year. Thank you to everyone. Thank you to all the viewers, all the commenters, all of the guests. Oh my God. You would think, can I just rip through the names of some of the guests that we've had on the show this year? Most of them multiple times.
We have the best guests. Period.
Yeah.
Nobody does this.
I mean, everybody from Brian Shannon to Jay Woods to Michael Batnick to Mark Newton, Todd Gordon. I'm just reading out random names.
Luis Yamada.
Ruiz Yamada came on the show. We had
Dietrich, Hurley, Ari Wald.
Yeah.
We had Ari Wald. I mean, yeah, it is wild. We had Jerry Parker and his parrot come on the show.
Jerry Parker. That's right.
Maybe the best of all. David Lundgren. Special shout out, David Lundgren.
Yep. On the schedule for next year, we've got Denise Shaw coming on. We've got Chris Verone coming on. Jeff Hirsch will be back. So,
yeah, big week.
Exciting times ahead. Thank you to everyone for all the feedback, good, bad, otherwise. We appreciate it. We couldn't do this without you. I mean, we could, but it would be way less fun without it. But
mostly, yeah. Go ahead. Sorry.
Yeah, it would just be less fun if it was just us.
And really, for the support in the chat, right? Like, this wouldn't be half as fun for us if you guys didn't come on here, support us, interact with us in the chat. We talk about a lot of these charts over and over again every day and every week. So for you guys to ask good questions and, even just make me laugh every now and then, or we get to talk about what you want to talk about, really makes all the difference.
The chat is hilarious. Someone made a comment that a while back that I like smile like a lot. It's because I'm laughing at the chat. It's because you guys are like make me laugh. That's why I'm smiling.
I do the same thing. The chat is so funny some days. I'm always looking at it.
Yeah, hilarious. All right, cool. Everyone enjoy your long weekend. Enjoy your holiday. Be safe, be merry, eat well, drink well, and we'll see you in the new year.
Bye, everybody. Happy New Year.
Happy New Year.
Running